See, it's a good team.
Ladies and gentlemen, welcome back. Special episode of Chart Talk. Just me today. I finally got rid of that dead weight, loss. He's holding me back for years. It's, oh God, this is awkward. Oh God, all right.
What were you saying?
Nah, I was just telling people how much I missed you.
It's the motherfucking Eagle Double G.
You're integral part of the team. I can imagine doing this without you. But let's jump right into a little market outlook, huh? Well, we got the team here in the building. So SPY just continues to be relentless. So we continue to see this relentless move out of the SPY. We have this upper resistance channel we're in right here. It's getting more difficult every day to put on new risk, but swings continue to work amazingly in this environment. And we saw today, like the intraday movement. Let's see the SPY real quick. So we opened today, and they try to trap shorts in right here. Really, we were down 0.25%. We were in Friday's range, like the 3 to 4 o'clock rip range. So they're gonna, push these lows, trap some shorts in, and then continue with the solid price action. And then we've had an unbelievable, insane amount of green days in a row, crazy run, but it doesn't look like it's slowing up just yet. I am definitely trying not to put too much new risk on, but the action has been great. So what's there really to say except ride the trend? That's really it. What are you thinking over here?
So just like the SPY, we saw with the consumer discretionaries, broke out above 300. It's grinding high just along with the market. So we just have a stop below those prior breakout levels and just ride it as high as they go.
Exactly. You don't want to take yourself out of the move just yet. That's the main thing. I saw we were down like 0.2% today in the morning, and the chat was just like pullback season, and it was like we didn't even give up Friday's gains yet. So we weren't even halfway between Friday's range. But they're gonna try to trap shorts until the move finally comes, the pullback. At some point we'll get a pullback to this 400 range. But right now, the trend's your friend, and we're grinding higher every single day. So not much to say besides that. Where are we going from here?
All right, next we have top ideas. So first one is Tesla. This thing is.
Oh, I can finally say my dog. Today was the first time I bought Tesla in years. I've been the one saying, don't buy Tesla. It's in too wide of a range and all this stuff. But what it do today is, you look at this action right here, and this just becomes a momentum bull flag, right? We get the move up, then we get the 4 days subsequent tight consolidation. Ruin the chart, but you see what I'm looking at here. So then this move, last week, these 4 days, to me that's just a controlled pullback. And then today, what really got me into the trade, I didn't even put it on the shakedown, I just put it in the watch list. They got a price target upgrade to like $1,100, which, that's not a normal price upgrade. That's like 50% higher from here, or 40, whatever it is. So those type of price target upgrades usually lead to some momentum. So that was what got me interested in Tesla today. So I bought that one. Looks pretty good. Where are we going from here? Uber? Yeah. Uber looks great. Uber had some great news. They had you couldn't buy it today though. That's the tough part. Or you could, you're just not, you're not making any money because they gapped it up. But overall, the stock looks amazing. Coming out of this macro pattern, looks like it's going to be a leader. They had a record March of bookings. Uber Eats, they announced, is doing $1 billion a day. And they think they're going to be profitable this year, which is something they didn't think would come for another 2 or 3 years. So if they put forth a positive first quarter of profitability, the stock's going to absolutely explode. So that's kind of what they're preparing for coming at some point this year. Where we go from here? A6. Ooh, is that my watch list?
Yeah, with the roll, that was the shake
This A6 looks pretty good. Ideally, we get some consolidation up here, this 30, and it leads to a great entry. Gave a great entry last Friday right here. This push move up, some follow through today. So you can't buy 30 tomorrow. If it gives us some sideways before the level, it'd be a great setup. Definitely in the right space here. Keep it moving. This alarm. What was the trigger on this one? It was I think it's right here, this 92-ish area. So this is more macro, but this thing looks great to me. I think this one pushes through this resistance here and continues higher. The problem is entries and risk and pivot. So right now, if you buy this 92, I guess you have to give it to this
84-ish.
Yeah, I mean, this closest pivot is 86. This 84 is the real support. That's a lot of risk. Give the name $8. It's almost 10%. So you'd have to make what, 40, 50% to the upside. That's kind of asking a lot. So, looking for a better entry on this one for sure. This one looks good coming up. PDCO. These are the names that have actually been winning the most this year. We want to talk about the Teslas and the sexier names, or software, whatever it was this year, Dash. But this one is just, it's going to be a slow grinder through this 33.50 area. Beautiful, beautiful flag on the daily here. It looks like it's going to push up and grind higher once it breaks above this area. That one looks great. What's up? You want to chime in? What you think about Hasbro here?
Hasbro through 100.
Hasbro through 100. So great day today. Doesn't look like it's ready quite yet. Earnings coming up April 27th. So, who knows if it'll give us that.
Is this all-time highs?
Let's see.
Nope. No, still got ways to go.
Ways to go. But this is a beautiful consolidation right here. So through this 100 in time. Looks primo. What we got? CI. Cigna. Yeah, this one's really nice. Upper level flag. I just think it's too soon. It's only, what's the weekly chart tell us? 1, 2, 3, 4. All right, it got 5 weeks consolidation. If we could give us another week consolidation up here, I think the setup looks a lot better. Get these moving averages to catch up a little bit. But overall, definitely the name you want to be. Healthcare has been killing it. What we got? BDX. Oh, this is a nice inside day. All right, so we see, it's kind of grinding higher here. All right, so we see the macro pattern BDX is putting through. You have to love this inside day right here. Could lead to a potential entry through this 249 to 50 area, but again, you probably have to give it down to this 242 area at least. So definitely more risk. That's the tough part about entries is that everything's up so much with the market run. It's not leading to very tight entries. So we're not seeing those like asymmetrical risk reward opportunities where it's small risk with potentially a big reward. We're seeing a lot more things that they might work out, but you're probably gonna have to risk a lot to do so. So that's why it's I'm saying it's tough to have new entries at this point. What are we looking at? CRE? Yeah, this CRE needs some more time, I think. Nice little pivot today. So here's what we're looking at. It has this move off lows, retraces the move, and putting in a pivot here. It could blast off higher from here if you wanted to buy this pivot, have a stop at these lows to try to catch that tight kind of pullback entry. That's what you'd be looking to do here, but not my favorite name, I'd say. Nice pattern.
So we have the COO setting up, flagging for a little bit through this 390, and also this W day. I think buy step in through 260 versus 250. So again, a few weeks ago, probably a dozen top ideas. This week we ran through a few, but it's much slimmer pickings when the market's up for 2 weeks straight. The one main question we had, a couple of members were asking us, what's the 15-minute rule, and do we have a similar example that we can show recently?
All right, so here's the basis of the 15-minute rule, and what you want to do. I mostly use this when I'm in stocks that are already winners. If it's this wasn't the best example because I wasn't up a ton in the name and I was giving it all back. So in those cases, I'm not, as willing to give the stock all the room. It's more of winners that I'm trying to stay in. But here's the move in ABBV. We bought here. We had some news against us, and I messed this up because I ticked out at the lows here. But what the 15-minute rule is you wait the first 15 minutes out. You wait for it to put in that new low because that's usually an emotional or reactionary low of people, the weak hands just hitting out. Then you put your stop at these new lows, and the stock can recover. And this one eventually did some recovering. I mean, it's still got a ways to go or whatever it is. But the gist of the rule is, you wait out that first 15 minutes of the gap down against you. You let it put in that low, and that's your new stop. And a lot of times it saves you in the trade. And it saved a lot of people in this one, for example. But that's really all I got for now. And recently when we used it.
I'll get them out quickly. No, I'll do the same thing with Abby, but just unlike the question they were asking. So it's more for, like Shake mentioned, you're in a trade. In this example, say you had your stop versus 106, it gaps down below that, so you're giving more risk in the trade already, and this is where the 15-minute rule comes into play. So in the for example, in this Abby, go back to this 15-minute. You give it that 15 minutes to put in that low, and now you're trying to salvage this trade that is now against you. So instead of puking out the low, you have a chance to get out at 106, a chance to get out at 108, 109. So it's giving you a second chance to salvage a trade that you're, underwater in versus just blindly emotionally getting out. So that's the 15-minute rule. You typically use it when a stock is gapping out against you and it's more risk than you initially anticipated.
There you go.
So, and hopefully maybe next week we'll get a better example.
Good trade, bad trade?
Yeah.
All right, my bad trade. Let's start with the worst. All right, so it's Airbnb. I've been pretty vocal about, yes, the market's going higher and all these things, but you need to be very, very selective out here. So, moving average back up. So, I was waiting. I like this Airbnb a lot. I still do. I think it's got a really nice macro pattern. It's just not ready yet. My mistake in this trade was I said that going in, but then I saw this crazy relative strength on this day off the open. So I bought it against 185 because of the strength I had seen, but that wasn't a very calculated buy. That type of buy works last year 9 times out of 10 in that environment, and it still works selectively. You look at Square did it, it came up off lows, 3 days consolidation and blasted off, but we're not seeing it as market wide, blast off lows, 3 days consolidation and fails. That we're seeing much more of that action. So I was just kind of seeing the strength, intraday strength. And, I don't want to be buying strength as much as I want to be in really calculated trade setups. I'll show you the difference in this Roblox. So Roblox was a great trade for me. So I initially bought a feeler here, 69, breaks this downtrend, breaks out of it, still very wide, comes down and retests this area. So now I buy with a stop at lows, and then I add 2 days later on. All right, so this is my initial entry, right? So then the following day, I wasn't planning on adding the following day just yet. I thought I needed more consolidation. Here's the intraday from that day. It kind of it consolidates a little bit intraday and absolutely blasts off 70 to 72. Doesn't look like much because the action afterwards. So it blasts off 70 to 72. I don't add yet. And then it comes back on very light volume, and then this is where I buy the bulk of my position. I buy 90% of my position here against these lows. So I know this low, this low has to be penetrated for me to be proven wrong. So I have to put on more risk. I don't have the same price. I was very tight risk entry, but I only bought about 10% of my position. And then it comes down, retests at 70. The buyers show back up with volume, and now, now we got a great trade on our hand. I sold 10% today at the strength, but that looks amazing. So the difference here is Airbnb is like I saw strength and I was just like, oh, I have to be in this trade, buying momentum, versus Roblox, waited till it pulled into an area. I'd been watching the name. It was a very calculated entry. Even when I added stock, I added against the proper area. So you have to see there's very two different aspects of kind of a similar trade there. But take it over, Ben Dog.
All right. So first up, we have this snap. Again, a lot of us bought up through 52, and we've kind of mapped this out. This resist area, the 65, and the prior all-time high 73. So we spoke about, this was on Friday, when it had this little kind of doji at highs in front of the 64 area. This was a good spot to put a stop below that low a day. Again, not really a proper pivot, but we got 20% in a week, which is just, it's just a lot, too much we want to give back. So for the guys who put the stop below 62, again, it was an easy 20% swing. I'm still in this. I still think we can see that retest the highs in time, but this was just a very easy swing that I don't think anyone really expected.
So that's what I'm talking about, asymmetrical risk reward. Like this right here, this pivot down there, buying there, the asymmetrical risk reward is great. You can only lose that much if you're wrong. And then look how much you did to the upside. We're not seeing now, because the market's been up like 10 straight days. Yeah. There aren't as many of these opportunities out there. So like any opportunities are likely, much worse risk reward equations. And if these names are still trading at support, we're looking at I like to go on tangents. But we're looking at Penn. This name can't catch a bid, and DraftKings, when the market's doing that, maybe it's just, those it's risk off time for those names, So, the names at support, maybe it's not time to buy those because the market's blasted off and they haven't been able to do anything really. Mm-hmm. So, just saying, it's a good time to be swinging stocks alongside, not a great time to be buying new stock this week.
Yeah. Next, TDG, again, this was a name that we've been watching for.
Today?
Yeah. This is a name we've been watching since kind of March. We watch it in this area, but again, it was just too extended. We just avoided it. Buy stop stayed in. It finally triggered today, and now we just have much tighter risks. The real out is kind of versus 575 area, but for now we can kind of keep a little tighter versus 600 if we get some follow through out of this area that's been resistance for quite some time.
Yeah, the daily consolidation right there is so beautiful right before the macro level. That's like that's it's kind of like an A+ chart, really.
Yeah, and this is blue skies.
But it's just it's just a boring name, slow name.
MMC again, same thing. We both through this 120 blue sky breakout. It's just continued to drift higher every single day. And again, same. My stop is still break even in this. If you want to go below this, what is this? it's like 123, you could versus 122, but again, it's just grinding higher. Really no sense of getting rid of it yet, especially with all these green days. DHR, again, same thing. We've been focused on these support buybacks. We saw it hold this 212 support. We bought up through it, and it's continued to drift into this upper area of this range. So again, our main target would be 248, but again, when it gets up there for the third time, it's more than likely going to be setting up for that move higher. So this is really just sitting with this name and just letting it kind of inch its way higher. And if it wants to roll back over, below 224 is probably a safe area to kind of get out and lock a little bit in with it. UPS, again, same thing. Support buyback, bought up to 164. Are you still in this?
Absolutely.
Yeah, so you're still in it. We saw this retest again. It looks great. I don't know where it's at now.
I didn't sell the retest.
No, but I'm saying, but it still looks great. But it always looks great going into the retest.
Of course.
Like right now, it looks phenomenal. Where we got to give it a couple more days and see if there is follow through it. If it goes, it's great. But this is usually when the people that were trapped look to sell.
Oh yeah.
And we did see this 171 area hold, so that could be a spot to limit some risk.
Quick trailing stop.
But we would still like to, even if this does flag out, there's no reason to get rid of this stock yet because we would still want to eventually buy through this 178 in time. What else? So those were the only other ones I had. I did get stopped out of AMD, which was one of the support buybacks that we took.
See, that's nice. Nice stop out.
So we...
There's a lot of semiconductor news today.
Yeah. So again, this was one bought up through 78. I actually had a buy stop in to buy up through 84. We were talking about this on Friday. Luckily, did not get triggered in. Today, got a little beat up, and I had a stop below 80. So I made 2 points in it. It's right back to my price anyway, so I'm happy with that, getting stopped up. But this is, of the half dozen or so support buybacks that we've taken recently, this is one of the first ones to fail. And for some of the guys, made some money. If not, you kind of get out break even now. But now it's harder to find these support buybacks, and if they are setting up when the market's breaking out, that's usually a sign that they're probably not ready to break out anyways. So those are my good and bad trades for the week. The only thing else we have is book of the week.
Do you want to start?
Yeah. So I have finally getting towards the end of Shake tricking me into the Texas Rich book. I think one of the hilarious things is half the title is related to the silver crash, which I'm on page 350 of this 400-page book, and it's the first mention of silver in this book.
My favorite part, how this is my fault. Like, I just recommend the book, and you're like, oh, you piece of shit. Like, I had to read 300 pages.
But the one relative point in that book was that, his big come up was oil, but he has this side business selling, he was one of the biggest landowners at that time, and he was selling all this, corn, wheat, everything you can imagine. He was just losing millions of dollars in this separate business where all the money was coming from his oil business, and he was almost bankrupting himself with this crappier side business where it was just get rid of it, close it up, and focus on the main business. And that's a lesson I definitely can relate to.
All right. I listened to an audiobook. It was fucking pretty fire. It was Nipsey Hussle, Marathon Don't Stop. This guy has an amazing story. So he's a rapper who was unfortunately taken away from us a year ago. He got shot and killed, but this guy was like, he has famous lines like, the marathon continues, play the long-term game. Everything we preach, he preached too, and all his raps and stuff. So I heard the story about him, and it's like they came up from just like selling drugs to like from, doing, selling drugs on the corner and then selling T-shirts in front of all these shops that got shut down. And we're like, well, why can't, they're selling shit right there too. Like the difference is these guys pay rent for these spots. So then, a week later, something went up like for rent in the development. And, they used all the drug money to, fund that, and then went legit. And they were like, giving jobs to the neighborhood. And he eventually bought the entire, commercial real estate block and all these things. He just did everything right from a finance perspective, which you never really see in the rap world. So, really, really interesting listen. I have a little bit left, but definitely recommend that one. Anything else you want to say to the peeps?
No, that's it.
That's it. All right. That's it. Oh, shit. Buddy's hats are fire. All right, folks. Till next time. Later.
Same thing. April 1st.
Way too close. Way too close one.